Hello and welcome to Monster Money, your go-to source for all things financial. Today, we're going to delve into the ongoing debate surrounding the debt ceiling. First, let's define what the debt ceiling is. The debt ceiling is a statutory limit set by Congress on the amount of money the United States government can borrow to pay its bills. It's essentially a cap on the amount of debt the government can accumulate. The current debt ceiling is set at $28.4 trillion, and the government is expected to hit that limit soon. Now, the debate over the debt ceiling is heating up once again, with Democrats and Republicans at odds over how to move forward. Democrats are pushing to raise the debt ceiling, arguing that failing to do so could have catastrophic consequences for the economy. They argue that if the government were to default on its debt, it could lead to skyrocketing interest rates, a plunging stock market, and a recession. Democrats are calling for a clean debt ceiling increase, which means no strings attached and no additional policy measures included. Republicans, on the other hand, are resisting efforts to raise the debt ceiling, arguing that the government needs to rein in its spending. They point to the growing national debt, which has surged over the past decade, as evidence that the government needs to tighten its belt. Republicans are calling for spending cuts to be included in any debt ceiling increase, saying that it's important to address the underlying fiscal issues facing the country. The stakes are high in this political battle, as the debt ceiling has the potential to impact the economy and financial markets in significant ways. If the debt ceiling is not raised, the government could be forced to default on its debt, which could trigger a financial crisis. It's important for policymakers to find a solution that balances the need for fiscal responsibility with the need to avoid economic catastrophe. But why is the national debt so high in the first place? The United States has been running deficits, which means that it's spending more money than it's taking in through taxes and other revenue sources. The COVID-19 pandemic has also played a role, as the government has spent trillions of dollars on relief efforts to combat the economic fallout from the pandemic. In addition, entitlement programs like Social Security and Medicare are contributing to the debt as the population ages and healthcare costs continue to rise. So, what's next in the debt ceiling debate? The situation is fluid and evolving, but one thing is clear. A resolution needs to be reached soon to avoid the potentially disastrous consequences of a default. Both parties need to come to the table and find a compromise that addresses the underlying fiscal issues facing the country while also ensuring the stability of the economy. In conclusion, the debt ceiling debate is a complex and important issue that has far-reaching implications for the economy and financial markets. We'll be keeping a close eye on the situation as it develops, and we encourage you to stay informed and engaged as well. Thanks for watching, and don't forget to subscribe to Monster Money for more financial news and analysis.